Gary Gensler is back, and he's here to support China. We'll break it down for you. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor, and that is Tangem. This is a place right now in this volatile time, getting self-custody in your plan is a key thing. And what I would do if you look at diversification, meaning be able to reduce your risk, get into self-custody wallets. You can start to move some of your crypto off of exchanges. Guys, this is one of the best deals out there in terms of wallets. It's the one I support. We love it. I use it. It's definitely one for you guys to get. So check it out. Let's go over into a couple of points right now. Breaking coming in from Kobe. U.S. officials are planning to use negotiations with 70-plus nations to ask them to disallow China to ship goods through their country. So this would change things dramatically if we get a dogpile approach to Chinese goods, and would maybe align the U.S. in terms of a global trade structure that could look quite different, which means more manufacturing and other things in other countries that are now starting to play ball with the U.S., including Japan, Korea, and of course, even Cambodia was talking about this, Bangladesh. We've started to see a lot of new manufacturing nations start to play into what Trump is trying to pitch. This is so hard. The Chinese small businesses now have brought to a standstill by Trump's tariffs. And the question will be a couple of things. When you look at and I don't know what the current data is in terms of overall GDP by small business in China. Here in the United States, it's quite large. But if you look at their position right now, we're worried if Trump does not change his mind, that it will be a dangerous thing for our factories. This, of course, coming in from a lot of these small businesses. Her key buyers, including Walmart, are also in the U.S. We've stopped production already. She says all the products are in the warehouse. So everything has come to a standstill. The question is how much pain can China take on this in lieu of, you have to remember, China does a lot of subsidies for their major businesses. Matter of fact, most of their manufacturing is subsidized. The United States does not do that. And if China doesn't layer this down into their small business ecosystem, we could see some pretty big impacts, because this most likely has a large amount of jobs that could play into this. I want to go to a clip right quick. This is Gavin Newsom saying, maybe I need to step aside and do something specific for tariffs. Take a look.
Today, I announced a lawsuit on behalf of the state of California suing the Trump administration. California is the largest manufacturing state in our union, one of the largest trading partners around the globe. No state will be impacted more than the state of California as it relates to the unilateral authority that's being asserted by the Trump administration to impose the largest tax increase in modern American history.
It hasn't been filed quite yet, the complaint, but it does appear that Gavin Newsom is trying to make this argument that the tariffs against Mexico, Canada, and China, that initial batch, are harming consumers and businesses. We should say that, of course, this is coming as a challenge to how the president invoked IEEPA, the International Emergency Economic Powers Act, and we've actually have seen some other lawsuits against this when it comes to the so-called reciprocal tariff plan on two bases. One, that the emergency invoked for that, which would be the trade imbalances, doesn't rise to the level of a national emergency. In this case, it would appear that California is saying that the fentanyl and immigration might not rise to the level of the emergency. And then, of course, the second part of this is that IEEPA actually doesn't explicitly state that tariffs can be invoked. So those are potentially two legal paths that we could see happen here. But we should also importantly say that in the past, the courts and the justice system has really broadly given presidents the authority to invoke national emergencies and often sides with them in these cases.
Yeah, I think that will be the case right now from a federal tariff standpoint, is that the states will most likely just fall in line. California, this is more of a posturing situation, which Newsom is really good at in terms of posturing right now. Quite possibly going to be running on the ticket very soon. So you've got other senators and congressmen out there pushing against China. This is Rick Scott. Of course, he announced a bill package that is going to be designed to protect investors, American investors, and crack down on the exploitation of a lot of the Chinese companies. And mainly this is around disclosure. It's the same kind of framework that American companies have to abide by, even international companies have to abide by to trade on our stock exchange. China has not necessarily been forthcoming. This is something that has been worked on for quite some time. This came from a tweet right here from Scott saying, congratulations, Trump's nominee for the SEC Chair Paul Atkins. This, of course, being the situation where Paul Atkins, if you'll remember, has also already been on record saying that he is interested in getting the Chinese companies delisted primarily because of their trading tactics. So this could mean a lot of the Chinese companies could start to disappear off of the S&P 500 or the New York Stock Exchange. This will be a big deal. And I think this is a completely separate issue than tariffs, because it is more of a regulatory alignment of how companies have to act to be able just to trade on the stock exchange. That, I think, will go through. Now, it's very possible also that this could be incorporated somehow into a tariff negotiation. That I would not like, because even though the SEC, I mean, listen, there's inside trading going all the time. There's a lot of companies that are not abiding by the rules that the SEC overlooks. Yes, we see that. But to do it kind of lock stock like what we're seeing right now with these Chinese companies would be the key. Now, Gary Gensler has come back to say, I think there might be a better way. Here's my opinion. Take a look.
But China for 20 years was not really following our rules. But we were successful negotiating with China that they behaved and they followed the rules. And we treated China with respect, but with firmness. And as long as I was there, they entered into a 50-page agreement, and they have been abiding by those agreements.
You know, it's so interesting coming from the guy who's been delisting crypto companies left and right, you know, in terms of just being able to, at least regulatory-wise, there is framework in place for stock companies to trade a publicly traded stock. And that, I think, is kind of the two-faced scenario that plays out with Gensler. Not a fan of what he's talking about. And again, he is really wrong here. This is O'Leary coming in and explaining to him, no, this is actually what's happening right now. Take a look.
If you go and look on the NASDAQ or the New York Stock Exchange, there's $800 billion worth of market capitalization of Chinese companies that don't comply by American GAAP laws. I have to comply. I have to pay millions of dollars to actually comply with the rules of the SEC and all the other regulators. The Chinese guys don't, and they get to raise money. So when I'm trying to raise dollars, I'm competing with a Chinese company that doesn't even comply. I mean, how is that even legal?
Donald Trump's on your speed dial. Does he get this?
Yes, and the good news there is they just brought a new sheriff into town. His name is Paul Atkins. He's the new head of the SEC, and he will finally make these companies comply. There's a law on the books that was brought out 4 years ago by Rick Scott, senator from Florida, that says if you're a Chinese company, you're not complying with GAAP, you have 36 months to comply. Then he tightened the law, made it 24 months, and if you don't comply, you're delisted. So all I'm asking, and I went to the Hill last week, I said to Atkins, hey, are you going to enforce this law? And he said, yeah, we're going to start delisting these companies finally. And that Rick Scott sent him a letter he made public last week saying, hey, look, do your job, because if you don't, I'm going to make a lot of noise. And I think that's what Atkins is going to do.
That could be the first thing we see come out of the SEC and Paul Atkins' office is a delisting of these Chinese stocks. Now, Gary Gensler talks about this a little further around the time frame, because 90 days is kind of where we are right now, and whether or not this is going to end well. Take a look.
I think it's not going to end well, Andrew. I think it's going to be a bit of a quagmire. My experience is that they're tough negotiators, don't get me wrong, and they're looking out for their advantage. But the best way to handle that situation is to be consistent, to be honorable and treat them with dignity, and to take the toughest messages private and one-on-one. And they sort of think that time is on their side. I'm not saying it always is, but that's how they think, is time's on their side, and they can outweigh the volatility of the policy on the other side. But I don't think it's going to be that easy. I think 90 days to kind of negotiate with dozens of countries, big consequential agreements, and then China's watching all this. And don't forget the real instability for businesses and thinking about their investments. They're pulling back. They have to be much more careful about their investments. And then don't forget about the deep instability in the stock market and the U.S. Treasury markets. And those are some of our considerations, of course, as our economy weakens and our markets are far more uncertain.
All right, so I don't know if I agree with that in the sense that they have time on their hands, because I feel like they have, because of the trade imbalance right now. Remember, they're almost 5-1 on trade to the U.S. versus the U.S. to China. And if you start to see a weakening of supporting of those companies, which we're already starting to see coming out of the Trump administration, eventually this is going to press, I would say, on the other side. Now, granted, yeah, there's always certain sectors of the industry that most likely will get affected, but this is just another blow, has nothing to do with tariffs in terms of how these stocks are going to play out on the New York Stock Exchange and whether or not they can just even come to the level of regulatory alignment that every other company listed on the stock exchange has to abide by, to O'Leary's point. Now, he gets into another statement in here, this is Gensler, where he starts to talk about now the betting markets. This is so crazy. Take a look.
Now they're on Robinhood. You can bet on sports outcomes. It's kind of getting you close to the sports betting piece of it. But prediction markets would be kind of a fun to look. It'd be fun if CNBC could host prediction markets. You know, should we be able to? Should they be broadly legal in this country?
Well, Kelly, I used to be honored to chair another agency, the Commodity Futures Trading Commission, and we took a lot of look at that 10, 15 years ago, and I know more recently. And I think that it does help people hedge certain risk. If you're hedging a risk of weather events and you're hedging a risk with regard to non-traditional financial risks and so forth.
Can it just be fun? Do you have to even hedge a risk? Could I just spend $1 saying this is what I think is going to happen with, I don't know, March Madness?
Dictator risk? As we had in the last election. Huh?
No, I understand that. I think that it can be fun. I get it, and it can be fun.
Gary Gensler said it can be fun. What's going on, man? He's now out there tireless. Man, just living the life, I guess, Gary. One thing to take a look at, though, back on tariffs, is you got to look at the pressure coming in from China. Let me kind of zoom in on that for you guys. From Japan. Japan's government pension fund now says it switched its foreign equities investment benchmark to exclude domestic Chinese shares. So they've already made the move. I imagine that we're most likely going to see that starting to make its way into the strategies right now of fund managers, probably immediately, as we start to see the pressure escalate on this delisting as we go forward. All right, I want to go to one more clip here. This is Trump versus China on the trade deficit. Take a look.
He's not going to balance the budget, the trade deficit. Balancing the trade deficit would take a multi-year recession. I think there is an inconsistency of what he's trying to deliver. You cannot have a much narrower trade deficit and have lower bond yields and have a weaker dollar. That is an impossible trinity.
And have a government deficit of 8% of GDP, right? That something has to break there.
Absolutely. And also, as much as countries are queuing up, apparently, to say that they will invest more in the US, and we've had announcements from Japan and Taiwan. Actually, if you are investing now, and remember, a lot of countries have been investing in the US for the last 3 years, helped by the Inflation Reduction Act and the CHIPS Act. But now, if you're building plant in the US, you're paying tariffs on a lot of the building materials and other areas that you are doing. So he is making the costs of producing in the US more expensive. And particularly as we go into 2026, you are going to see a lot of those savings going into European investments. And there's still a lot of credibility in US institutions in terms of perhaps not the same yield that you got out of the US, but you don't have the same growth outperformance in the US, and certainty and I guess conviction that the US dollar is going to be persistently strong. Now the euro is actually a bit stronger.
All right, so that I kind of agree with that in the position that, yes, there are some trickle-down effects on how this is going to roll into a lot of the manufacturing that could be brought stateside. But really, when you look at the situations that play out with a lot of these, I think is going to boil down to one simple thing, and that is whether or not Trump will hold through on this, because it's kind of a situation right now, who's going to flinch first? I think that they are going to come to an agreement. And I think this has all been a negotiation ploy. Now, granted, I know a lot of people are saying, man, there's a lot of irons in the fire for this just to be negotiations. But I think they are going to back off these. Now, granted, it's still showing up as one of the most highest in terms of volatility. U.S. Economic Policy Uncertainty Index soars to its highest level in history. This is where it gets crazy because that slows the market down dramatically. A lot of investors, as well as a lot of companies, are pausing much of their strategies because they're kind of in a wait and see moment to see how the White House is going to close this deal. This can't go on for much longer because I think the pressure on the White House is going to get a little bit out of control. And that's what worries me, is when the pressure comes in. Trump is one of those who reacts not well to when he is wrong, and he kind of doubles down. So how much pain can he go through? I've been surprised at how much pain he can go through in the past. If you read his book, he went through a lot of pain during these negotiations, but he held. The difference is now he's doing it with the American people going through pain. So maybe the response is going to be a little bit different. Again, there's a lot of different working parts here that still are yet to go. And I think everybody's looking at it right now, maybe on a little bit more short-term alignment. How should you play the market if you're looking at it today over the next 60, 90 days? Because we're in a very interesting state of flux right now. We had this guy on the show not too long ago. He's an analyst by the name of Chris Vermeulen, and he has different analysis. Take a look.
I don't think we're going to go down in April. I do think the market is set to bounce for a few weeks, but I do think maybe the sell in May and go away will come into play. From where price is right now on the SP 500, we could drop about 16%. That would be the next pivot low on the chart. And that's what the Fibonacci and the short-term technicals right now are pointing to. With that said, the caveat is I do believe it's popped and it's putting in a little pattern here, and it is going to try and push higher. So as if it does, that we have to reanalyze and recalculate. But there could be a 16% drop over the next couple of weeks, to be honest. That's what happened in 2008. It actually would reverse like right now and hit those new lower lows and then put in a multi-month bounce. So it's this is why we're on the sidelines. There are massive mixed signals.
All right, so sidelines, massive mixed signals. What he's looking at right there was the SPX. So if it does come off the top 16%, he's talking about around a 4,500 S&P. So that's a problem, but it could be good for Bitcoin because we're holding at 85 right now, sideways for about 4 days here. If that were to jump up to 90, let's take a look at the 95 range from where we're trading just right now. We're talking about a 13% move here. So that would be significant in terms of the market. It would heat up the altcoins very quickly. I kind of agree with him. If that were to occur, May would be a possible pullback. That's, again, if you're not financial advice, but if you're trading in and out, doing things like that. If you're looking long term, all of this is really just weather the tariff war, look to 26 and 27 on your exits. Many people are playing the game right now, and they're looking for small entries based on these market retraces as they start to happen. We're going to continue to give you guys, of course, a full analysis of all this. We'll get back to our trading videos and also some of our breakdowns. We've got a lot of stuff coming in this week, so make sure and subscribe to the channel right now. If you're not in the Diamond Circle, get in on that. It's our free email group. And, of course, get in on the Telegram group. It's free as well. Follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.